And welcome back. For the first time since early March, the average 30-year fixed mortgage rate surged to over 7%. So for example, according to Investopedia.com, as of today, which is May 23rd, the average increased to 7.24% for the average 30-year fix for people with exceptional credit. Also, according to the Mortgage News Daily, as of today, average rates increased to 7.01% for a 30-year fix. For FHA and VA loans, that's around 6.6%. So when looking at rates right now at 7.01%, this is actually the highest rates we've had going back to March 8th this year. Also, this is a big increase compared to 1 year ago as well, because 1 year ago, average rates were at 5.36%. That's an increase of 1.65 percentage points in one single year. So in today's video, I'm going to touch on what's happening right now with rates, but also some more early indications of home buying demand so we can gauge where a U.S. housing market is headed. If you guys are new here, I invite you to subscribe to this channel because I post frequent housing market updates so you guys can make a more informed decision about whether you should be buying or selling a house, rather than me saying now is a good time to buy a house, or every time you ask me that now is a good time to buy. A common knee-jerk reaction that some agents have, of course, right? My philosophy is provide the data so you guys can make a more informed decision. So let's first talk about rates right now, how it's impacting home buyers. So looking at the average 30-year fix, again at 7.01%. And keep in mind, at the beginning of April, to be exact, April 5th this year, average rates were at 6.16%. Therefore, rates have increased approximately 1 percentage point in the last 1.5 months. And one of the impacts to this of rates increasing by approximately 1 percentage point since early April is this causes a 10% decrease in buyers' purchasing power. So therefore, if you were approved for, let's just say, a $1 million home loan back in early March or early April, I should say, then because rates have increased by about 1 percentage point, you may only qualify for around $900,000 because rates went from 6.2% to 7%. In addition to that, if you're looking to buy an average price home today, here's the difference in your average monthly housing payment. So the median sold price nationwide is around $370,000. Hasn't moved too much over the past month or so. So putting 5% down, buying a $370,000 home, rates at the beginning of April, again, were around 6.16%. Your P&I payment, or your principal and interest, would be $2,143 per month. Look at today's rates, though. At 7%, using that same scenario, your housing payment just increased to $2,341. That's an increase of about $200 more per month over the past month and a half. This increase in rates as well causes a giant increase in the amount of interest paid over the life of that 30-year loan. So when looking at the difference for rates right now at 7% versus that approximately 6.2%, you're going to pay approximately $70,000 more in interest paid over that life of that 30-year loan. And you can see that right here because total amount of interest paid at 7.01% is $491,000 over that life of that 30-year loan, which, by the way, would be paid off in May 2053. So approximately $491,000 is the amount of interest paid. When rates are at 6.16%, the interest paid would only be $420,000. This works out to be an additional payment of around $2,333 more per year in interest paid over that 30-year loan, or an increase of $194 more per month in interest paid just due to the fact that rates increased from about 6.2 to 7%. So to briefly summarize this, based on someone buying an average price home today at around $370,000, putting 5% down, you're going to pay approximately $200 more per month for your average monthly housing payment because rates increase by about 1 percentage point. On top of that, your buyer purchasing power just decreased by about 10% as well. And of course, to make matters worse, you're going to pay approximately $70,000 more interest paid over that life of that 30-year loan. Here's something we also know as well, because according to the National Association of Realtors, in conjunction with Central Lock, which is a lockbox system company that real estate agents use in order to show houses to their buyers, this report here was just posted on May 19th. They reported for the month of April that real estate agent showings nationwide decreased by 10% compared to the same time frame in 2022. Also, real estate agent showings decreased in every single of the 4 major regions as well. The Northeast fell by 18% compared to April 2022. The Midwest fell by 14%. The West decreased by 11%. And the South declined by 6%. When looking at showing time, it's a little bit of a different story here because they actually provide 7-day moving averages. So the most recent week they have, can't talk, is actually for May 22nd. So for this year, there was a 25% increase compared to January this year, the first week of this year. Last year, we saw a 9.3% increase compared to the first week of 2022. Back in 2021, though, absolutely insane, a giant increase of 37.7% compared to the start of that year as well. So something I found to be interesting here as well is that when you zoom in here, looking at year-to-date stats, we're seeing actually more real estate showings, or actually far more real estate showings across North America compared to the same time frame back in 2022. Keep in mind, though, this is based on the changes compared to the first week each year. So this is not actual raw numbers looking at the total number of real estate agent showings year over year. Just looking at the comparisons compared to the first week of each year. But something to note here is that back at this time last year, this is really when the housing market was really starting to slow down big time. Because keep in mind, in June was the all-time record high in general for home prices nationwide. And so we saw a slowdown in home buying activity in the previous 1 to 2 months before that. So looking at real estate agent showings right now, we have far more right now compared to last year. But look what happened to rates last year. This is important to kind of get some context regarding this. Because back in mid-December, average 30-year rates for people with great credit was around 3.16%. But by the time we hit, May 22nd? Yeah, by the time we hit May 22nd, which was about right there, rates increased to 5.36%. That may sound like a great rate today, but that was a giant surge in rates they saw last year. An increase of more than 2 percentage points in about 5 months, which is just absolutely mind-boggling. And because that giant surge in rates we saw back in the early parts of 2022, that's why real estate agent showings started to decrease starting in around May. Here's something else we also know as well. When going to Google Trends and looking for homes for sale, these are Google searches for people searching in Google for homes for sale. So when looking at the trends over the past 12 months, it's actually a decrease of 22% in the amount of searches for homes for sale on Google. The index is at 78 right now. 1 year ago was the peak over the last 12 months, or the previous 12 months, when the index was 100, a decrease about 22% over the last 12 months. In addition to this, the amount of people searching for homes for sale has been relatively flat all year. So for the first week this year, the index was 76, a small increase for right here in late February, but then again, decreasing once again down to an index of 78. So what this is telling me that we have relatively the same number of people searching for homes for sale compared to the first week in January, which tends to be a very slow time in the real estate market. So this is an early indication of home buying demand, what may be expected in the next 1 to 2 months regarding home sale activity in the US. Here's one more thing we know as well, because we're seeing a lack of contracts being signed between buyers and sellers of existing houses. Because according to Redfin, for pending home sales, that's a decrease of 14.6% compared to just 12 months ago. a lack of contracts being signed compared to last year, but also compared to 2021 as well. So for the 4 weeks ended May 14th, there was around 91,000 pending home sales. 1 year ago at this time, there was around 107,000. And back in 2021 this time, there was around 118,000. Now, part of the reason why we're seeing a lack of contracts being signed is due to the fact that rates have surged to around 7%. So that could be one reason why we're seeing home buying demand decreasing, but also we may be seeing a lack of contracts being signed because we're not seeing enough new listings. New listings for the 4 weeks ended May 14th decreased by 24.3%. There was 90,000 new listings over the past 4 weeks, but back in 2022 this time, there was 119,000. I mean, how mind-blowing is that? There's approximately 29,000 more new listings back in 2022 compared to this year. And this, of course, is a huge problem, which is causing a lack of housing affordability, as in some marketplaces like Sacramento, for example, home sellers are getting multiple offers once again. And with that said, please comment below with your biggest takeaways from today's video. Also, if you guys got any value out of this video whatsoever, then please hit the like button. I greatly appreciate that. Of course, I appreciate you. Hope you guys have an awesome day and look forward to seeing you on the next video.